Why is the market pumping like it is? It has to do with a CPI number, which I'm going to get into. Plus, I have some very damning evidence of a collusion among regulators to bring down crypto banks. This is not clickbait or anything else. This is real. But first, please like and subscribe and check us down below for our CT Club, where you get our trade alerts. You could have seen what we were getting into during this last dip that we had, where very few people were kind of bullish on it. You know, buy when there's blood in the streets. Whatever. You can only lead a horse to water, but you can't make it drink. All right, Signature Bank. You know that bank that's failed. Board member says regulators shut down the bank to send a strong anti-crypto message. Nick Carter, he says Barney Frank openly admits that Signature was arbitrarily shuttered despite no solvency because regulators wanted to kill the last major pro-crypto bank. Colossal scandal. Yes. Obviously, this is what's happening right now. So yes, there is a huge scandal going on. I'm really looking forward to covering what is actually going to be happening through this. But yes, there was a concerted effort to bring down crypto-friendly banks so that there wouldn't be any more projects being built in the crypto space. Interesting. Markets now expect to have a 5% terminal rate and cuts in July. Not only that, but Fed's Nomura says forecast 25 basis point Fed rate cut and then QT or quantitative tightening halt in March. So in other words, they're not going to raise interest rates much anymore, and that is one of the reasons why the market is skyrocketing, especially with this CPI number, which I will get into in a second. But first, okay, Silicon Valley, let's go back to what has happened. Silicon Valley customer withdrawal made history. There was a $42 billion withdrawal on Thursday. Now, keep in mind, that's $4.2 billion an hour. The previous largest bank run in modern US history was Washington Mutual Bank in 2008, and they totaled a $16.7 billion over 10 days, okay? Really interesting number. Considering that the FDIC, let's go through history here. 1934, they covered $2,500 per depositor. I'll skip over. 1966, that was $15,000 per depositor. 1980, $100,000 per depositor. 2008, $250,000 per depositor. Now, unlimited. Yes. You know what that's going to do? It's going to cause banks to do really reckless things. If you think 2007, 2008 was really crazy with their mortgage-backed securities and their subprime loans, wait till you see what banks do now that they can get away with anything because the Federal Reserve is essentially going to print as much money or currency as possible to backstop any losses that banks incur, to ensure that there are no bank runs. The law of unintended consequences are happening right now. Now, this last down draw in Bitcoin, right? So we had 18 days, we had about 15 days, but 18 days altogether of us going from the top to the bottom, right? It only took us 4 days to go right back to and past to 2023 highs, which is $26,000 right now. So this is Bitcoin for you. And we've already regained what happened with FTX. Already. It's crazy. So that is why we dollar cost average. That's why we don't try to guess what the prices are doing. Nobody had guessed. Nobody. Your favorite chartist, I don't care who it was, guessed that we were going to go days later from 19,000 to 26,000. I didn't see one chartist out there. The most popular guy didn't call it at all. This is why I dollar cost average instead of trying to trade where 90-something% of traders actually lose money in the market. Now, bank giant JP Morgan Chase and Citigroup are trying to handle the largest movement of deposits over a decade. Why is that? Because I think a lot of people, even though the Fed said that they're going to backstop all of these deposits, I think a lot of people are kind of freaked out that, hey, maybe we should go with the largest banks out there, which is JP Morgan and Citigroup and Wells Fargo. These are the banks that are going to benefit the most. And makes me wonder if this isn't planned. Just makes me wonder, because if you look at the creation of the Federal Reserve, that was the banks coming together, the largest, most wealthy families in the world coming together and creating essentially the Federal Reserve. That's how it was created, and I wouldn't put it past them to do this. Okay, let's go on to this. 60% of deposits in U.S. banking system are over $250,000. So this is Goldman Sachs saying this. That's surprising, but that's a lot of money. That's over $10 trillion right there. Okay, that's just 60% of the deposits out there. And that's what the Fed is going to have to backstop. Now, Larry Summers says this, okay, SVB committed one of the most elementary errors in banking, borrowing money in the short term and investing in the long term. When interest rates went up, the assets lost their value and put the institution into a problematic situation. Nick Carter commented, this is perfect, that's literally how all banks work. Yes, so you have a legacy financial titan that is totally corrupt, Larry Summers. Next up, we have with CZ, you know, the $1 billion that he wanted to buy BNB, ETH, and Bitcoin. Well, he hasn't even started deploying these funds yet, so I don't know what he's waiting for, but he did miss a huge rise in price just now. So right before I get to the CPI number, I want to go over this one last thing. Silicon Valley Bank CEO, CFO, CMO, right, sold $4.4 million in stock over the last 2 weeks. Really interesting stuff. So I think they kind of understood what was happening. That is why if a bank ever goes on TV and says, hey, everything's fine, run for the hills. Okay, don't ever trust a banker. Now we're going to go over to some really interesting things. So the Federal Reserve came out and said, hey, CPI is at 6%. So unemployment essentially dropped. Well, that means that the Fed's interest rate hikes are working. Have they worked enough to where, you know, people aren't going to expect more rate hikes? I think the market is priced in a 25 basis point rise. That is why we're experiencing a pretty good sized rise in crypto. And so that's essentially, obviously it's fake. Obviously all of this is fake. Obviously the CPI is government inflation, right? So government inflation doesn't include food or fuel. So when you take food and fuel out of it, yes, you're gonna have a much lower inflation rate, but that is what, you know, the government wants so that they can manipulate the numbers. So that means that the market has expected this, and the market isn't kind of trying to guess like where the Fed is going to be going. So there's more certainty in the market, and that is why you've seen a rise from, you know, today it was like 24,000 something to over 26,000. I don't really know where it's at right now, but yeah, that's kind of what you're seeing right now. And Bitcoin is skyrocketing. So enjoy the day. I'm going to keep you updated on what is going to be happening after this. I'm very fascinated to see what happens with these crypto banks, and because if you should be a little bit concerned on this, because a lot of crypto banks rely on venture capitalist funding, and so if venture capitalists aren't completely secure in what they're doing, yeah, they're probably not going to invest as much, right? So what I mean by venture capitalists might not be investing as much in the crypto space is that could put a damper on the amount of different coins that are being presented right now, right? So we've had so many different projects out there, but a lot of these projects are VC backed, right? So if you don't have as much money flowing from VCs, you're gonna have to do more of like grassroots startups. I think, in my opinion, there'll be much more quality projects out there rather than just throw a bunch of $100 million at this and let's see what happens. You know, a lot of people lose money that way. Yeah. So this is good and this is bad in some sense of like, you know, if you had a VC project that you were hoping to, you know, hoping it would get funded a little more, that might put a damper on that, but keep in mind that this is better for the entire crypto space in the long run. So that's all. Please like and subscribe, and I will talk to you soon.